Hello, Warriors. Let's go. Everyone ready? Mike, Bran, I heard there was a surprise cut by the COT today. Anyone else hear about that? Hi, AJ, Kman. Ryan, anything on the COT?
What happened where?
The COT,
Yeah.
the BOT, the Bank of Transylvania, that they're trying to stimulate blood flow. It was a surprise cut. Don't you get all of those? Come on. Anyway, how do you trade the damn thing? All right.
That's more of a Halloween joke.
Yeah, it was kind of, yeah, timing's everything. All right. Yeah, I still have some tryptophan in me, George. All right. So let's go to work and talk about what's happening overnight. And there are some significant events technically that we actually we talked about last week. So um, yeah, let me get rid of this. All right. All right. So the dollar. You guys see the dollar screen? Brian, you see it?
Yeah.
Okay. So, I had this line drawn. This was a breakout line. It held where it had to. I mean, underneath it, I think you could say the dollar top is in. But this really held where it had to. I think it could imply new highs. So, I still think most of the month of December is going to be dollar friendly. So here we are in December. And then, I just want to let people know um, no one should have been surprised by the 700 pip decline in US dollar yen. Okay, I've been pounding the table. I tried it a few times, uh, you know, here and here, and then finally it started to work, and then we had the breakdown. But the point is, if you didn't sell the top, it's not too late. You just look for rips to get in because, let's keep in mind uh, the fact that it's a failing rally, that even though there isn't symmetry up here, we thought it would stop at 52, look like a right shoulder. It's still at the minimum a descending triangle. And I think eventually we're going to attack 140. Um, you with me on that, Ryan? You think that the last week was decisive for something like this?
Yeah. I don't know if it's decisive. It's early days yet. I mean, you've got the Bank of Japan. You've got UEDA pretty much saying that they're on course to hike again in December
No.
meeting. His comment. So there's every chance of seeing some downside on the yen move. The dollar, I think, you got it right in the Dixie. You've had it right in this one. But look at 10-year yields. We're right on that 420. We had a little move last week, Friday, underneath, just
Yeah.
briefly. But we opened up today. We're sitting right on it. I think this is your measure for the dollar. If that 420 goes, then dollar's going to go with it. But it's
Okay.
it's another day where there's different dollars at play. If you look at euro dollar, we're sitting bang on that 105 again and looking a bit weak. Perfect rejection of 106 last week.
Yeah.
On
Called
Friday.
that.
Yeah, keeps that in play. Lots of folks in the room short this one. I'm still short a bit of this one. And
Yeah, well, I think they're right. And, I just noticed this. There was no divergence on this bounce. There was no reversal on this bounce. It just bounced, okay? Typical of a bear market rally. But, markets usually don't bottom with a 20 handle on the RSI.
yeah, that was a
So,
bit of a freak moment, though, wasn't it? Last,
yeah,
but yeah, you've got to sort of look at what it's done after. We've held that 104.50 area a few times,
yeah.
and yeah, so I've been saying it since the move from 112. It's not out of the woods. You know, the fact we can't bounce above 106 keeps the downtrend in play. So if this one's heading lower, that's dollar strength on one side.
Yes.
So
Yeah.
again, you can have weakness in dollar yen, but strength in the
Yeah.
dollar in this one. It's different dollars.
Yeah. Okay. Cable's pretty similar pattern to euro. Again, RSI, this one was even weaker. Okay, like an 18 reading down here.
Yeah.
I've seen counts that take it down to about 22. So that that'll imply 109 Dixie. This high was 108, so we'll go 109. Any comment, even though they're saying economically, the UK is actually acting better than the continent, than
Yeah.
Europe.
It's like, well, I wouldn't say we're less crap than
All right.
crap is crap, but we're less crap than
Yeah.
they are.
All right. How about Looney here? I mean, it pulled back. To me, it looks incomplete. You have one, two. I think we're going to get another one. Are you still trading the Canada from the long side and buy this dip?
No, I haven't. I might have missed the move last week to the low 139s. But I think there's still potential more upside for this one. It's
Yeah.
slowed up a bit. If you compare it to the last couple of months,
Yeah,
the
it
rally's
has.
slowed up a bit, and we are keeping
Kind of.
below these key areas up here.
Yeah. Okay. Because Aussie looks like there's new lows coming as well. Um, you know, maybe 350. Take this out. We got some type of three drive down here,
Yeah.
and get in Canada. One more high is a three drive up here. So that's kind of what um, I'm looking at, and
Well,
uh,
you know boxing, don't you?
yeah,
And Aussie dollar looks like it. You know, you keep getting put on the mat, you keep getting up. At some point, it's going to be too
yeah,
much, and you can't get off the mat.
yeah, yeah. Well, maybe it gets off the mat once it's tossed out of the ring at 63 and a half, buddy. Maybe
Yeah.
2.5. We'll see. Uh, Kman, good afternoon, buddy. How are you?
Good morning, Dale. Happy December.
Yeah, yeah, new month. Maybe it's going to be a December to remember.
Yeah.
Uh, huh?
Oh,
Uh,
yeah.
top of mind today?
Top of mind, I'm looking at a potential December of two parts. Is the one running into all the central banks and then the end of the year rush.
Right.
Um, I can't unsee the end of 2023 for the dollar and look at where we are, equity markets, record levels and stuff. I still think there is a risk for the dollar, regardless anything else, into year end. But a bit like the first couple of days, maybe dollar positive, and that's how I look at the stuff. And again, as I've been saying so many times, look at the other side of the pair to define which one you want to be in. Euro, I still can't buy a single
Yeah.
euro for as long as it's below 106 figure 10. But then, for instance, cable, I'm looking at it perhaps a little different. I'm thinking if we see a decent deep start of the month in the cable,
Yeah.
I may want to counter that. Much
All
more
right.
so than on the euro dollar. Yeah, and the yen, I really have no idea. UEDA keeping the door open, good sell-off that we saw end of month as well. Actually, it has to be said that the end of month played out as it should have been. So that was a relatively clean one. Yeah, that's about it. I like the fact um, a lot of people in our room do, but perhaps not so much on Face or so. But if you look at 88 on the dollar Swiss, rock solid. I wouldn't even exclude SNBs around there because it's tried 4 or 5 times to break below 88 over the course of the last 2 weeks or so, and it, apart from that one drop, it recovered everything. So you look at that 88 on the dollar Swiss.
Yeah.
On Friday we just went like 3-4 pips below. It's just a very, very simple one, that one.
Yeah, you know, the dollar's going to new highs. This should too.
New highs, yeah, but I think step by step, I do think that in dollar Swiss, for instance, there is a risk that SNB does
Okay.
close to 50 BPs this month, but on the 12th. But I'm still in doubt that any of them do 50 actually. But into that meeting, we may see a bit of a revival there as well.
Okay. Well, you know, I mean, horizontal support's pretty obvious.
It's yeah, extremely clear, and that makes a stop loss relatively easy to place as well. Get through 87.90, you don't want to be long.
No, you could probably be long with reverse out stops under the low.
Well, that's what I'm doing, and then gradually when it moves up, a bit inverse to what you did in the dollar yen. Gradually when it moves
Yeah.
up, take a bit of profit, comes back down there, reload, and
Yeah.
rinse and repeat.
Okay. All right, buddy. Some nice points. Blake, how are you today? I saw a picture of you and your family in San Diego, and
Good morning, Coach.
yeah, it looked like you guys were very happy.
It was, it was nice. I look at it as it might be our last trip together as a family.
Don't say that.
No. But as the kids are with us, living with
Oh,
us is
yeah.
what I mean. Because, next year, both my kids will be leaving the nest, if you will. So I'm taking it in, and it was nice. So
Go ahead, buddy.
yeah, and on top of that, we had great football weekend. My son's team absolutely crushed, some of these California teams, which is difficult to do because they notoriously are really, really good, and they're just playing big boy soccer. I mean, these men are running around like Ryan, you would have been happy that we had 2 red cards yesterday, not our team, but the other team. Yeah, we went at them, beat them 4-3. It was my son played the whole weekend. He was he was a rock star, so great time.
Good stuff.
Oh man, it was good stuff. Anyway, so Dale, I can take the screen, but what in a second, but what I am noticing is obviously the euro's under pressure because of what's happening in France, and
what is happening in France? I'm uninformed.
Well, that's the thing is what I've been learning is there's a big budget issue, and by the way, I got home at like 10 o'clock last night, so I've lack of sleep, and I'm just getting caught up with everything. Ryan, Kman, can you kind of brief us, give us the lowdown on why the euro has been trading so heavy and so poorly since the open, basically?
Yeah, there's a mixture of things. I mentioned the Dale yields holding up, gave the dollar a bit of a bid this morning. But yeah, we've had this problem going on in France for a while now. They're trying to pass a budget. It's all kicking off. The right wing party wants concessions. It wasn't getting them, so it's threatening no confidence votes. And now they're rushing around trying to offer deals and whatnot. And it's just another political mess that we have to deal with, the same as we've got in Germany and elsewhere. It's one mess after another.
Well, how big do you think France is a bigger risk than Germany, or is it both just coming at the same time, and that's the bigger risk right now?
I think it's both as big risk as each other. We've potentially got a confidence vote, and with Scholz getting the boot, potentially upcoming. But when you're talking about budgets, that's when the market, sort of sits up, because if you can't pass a budget, then you can't decide what you're doing with your fiscal spending, investment, and all the rest of it. And but I think it's just another straw on the camel's back, with all this politics going on.
Got it.
It just weighs and weighs and weighs.
Well, one of the technical setups, as you guys can see here in the and this is in Forex Analytics and the basic technical analysis, we got like an inverted head and shoulder pattern setting up. Now, it's just a setup, and it's not it doesn't nothing happens unless you break above 106. I mean, that I think Kman was just saying that too. Like, you can't buy the euro until it gets above 106. But is it possible? And I'm gonna turn this question over to Kman. Is it possible that we see some dollar weakness, even enough to overcome what you're seeing in the euro weakness, as the market's looking for some dollar weakness going into year end? And this is here's the month of December, and we're just kicking it off. And I look around and I look at like sterling's holding up a little bit better. You got the Aussie that's still under pressure, but still holding up. Is it possible that the flows could really overcome what we're seeing here in the political environment?
Yeah, of course, because those who have to do the flows, they don't delay them. Well, they could delay them, but they can't not trade them just because something is going on politically, and that's why we are seeing. We're seeing moves into end of years, which are sometimes quite inexplicable, but for those who know which flows are to be done, I think there's a real possibility that it happens. And then come January, you pick up your macro picture again.
And so and I was going to say, so maybe one of the things that could really turn this on, where we see some dollar weakness, is maybe some of this political noise is put to rest here in the first couple of days, or maybe in the first week of December. And once we can get kind of smooth things over, and then plus we have obviously a lot of data this week with US data, with jobs.
What country are you talking about, Blake?
No, I'm talking about
politically.
France, politically, like France and Germany. We get past that, maybe the euro that frees the euro up to break above 106, and maybe we trade back to 107, 108 before year end. And then, as Kman, you're pointing out, at the beginning of the year in January, we all look around and say, oh shoot, this is a great place to be buying dollars right now based on the growth differentials and yield differentials, right?
Yeah, that's it. As I was saying earlier, I just can't unsee what happened at the end of 2023. There wasn't really too many outstanding reasons to sell dollars, and yet we had the worst dollar end of year that we had in a decade. So I mean, it could be a remake. It was just too big for me to unsee it, And I'm a Euro bear. I mean, at heart, but that I think first part of December maybe still negative. But then the second part, I think there's a bit of a risk for the dollar. Once we get over the central bank hump.
Right. Okay. And we have a lot of central banks that are meeting, and obviously the first 3 weeks of December we got a ton of central bank meetings. But this week, we can discuss this. And I see Steve is here, and want to maybe get some opinions from Steve on like the euro and how he sees things. This week, we do have, I don't know what central banks are meeting this week. I think next week it really kicks off, like most of them.
the BOT, Bank of Transylvania.
Oh, Bank of Transylvania. Okay, good.
It kicks off next week.
Yeah, it's all next week. But
all right.
The jobs report this week is going to be a big deal, and we have obviously a lot of data coming in, even starting today. We have ISM manufacturing data that's going to kick us off. Not here on the show, but throughout the course of the week, we're going to have a lot of data coming through. What data is most important to you, Kman, this week? And then I'm going to ask Steve about how he feels about the euro.
I think the jobs report at the end, but we do have a bit of ISM coming in between as well. It's probably going to be the jobs at the end of the week, because the market is probably going to look at it now to decide, or not to decide, but to at least maybe have another repricing on what they expect from the Fed last meeting of the year. But yeah, this being said, the jobs report, if you get a weak one, this could set off your year end straight there, and the rest doesn't matter anymore. That's another possibility, you know.
Right, and I made a mistake last week. I was looking. I said something earlier, or sometime around the middle of last week, and I was looking at the jobs that the market's looking for. We are expected 200,000 jobs. I was thinking that I was looking at the previous data that we'd had, 12,000 jobs were created. We are expecting 200,000 jobs for this month, and somewhere in that neighborhood. So that could be the catalyst that drives, some big moves. Well, let's ask Steve here, since we do have Steve in the house. Good morning, Steve. Hope you had a great weekend.
Good morning, mate.
Hey, Steve. So, how do you feel about the euro? You're obviously boots on the ground in Athens, Greece. You're seeing all this political turmoil in France. How do you think overall this is going to affect the euro, and what's the play here? I mean, is the euro going to see parity, or are we going to see 110 first? What do you think?
The euro is still within a descending channel. The DXY is still within an ascending channel. In fact, that's where it started rebounding from today. And even if we want to forget all the turmoil you mentioned, etc., the technical picture remains the same, right? And is that we should be looking lower for the euro. And yeah, parity is a very, very likely scenario.
So
let me ask.
Go ahead.
I
Go
just
ahead.
wanted to ask Steve. So, Steve, the sequence of events, bearish yen cross is under pressure. Usually the market's the next domino. Risk is the next domino, especially for going back to 140 yen. I don't know what your targets are. Do you think that this is the unwind of the carry trade 2.0?
100% USD yen has broken down from the ascending channel. Momentum seems to be picking up. So I think it's a lot more likely than it has been in the recent past.
Okay, because that if you look at that low into August, that's when we had 10%
Now,
sell-off.
USD yen breaking down doesn't 100% or necessarily mean that risk is going to be breaking down at the same time, right? Because there are different intrinsic, reasons for things to happen. But yes, this is a traditional correlation that usually, even with a lag or some kind of a delay, it ends up working, right? That is true. That is true.
Okay. All right. Go ahead, Blake. I'm sorry.
No. Just in case you guys missed it, Steve, you'd blogged about the dollar yen last week. I believe it was last week. Oh, November 22nd. So it was a little bit ago. So this is the your chart of the day, and you said there's a risk of a breakdown. So it is starting to break down. Obviously, and actually, if you look around at some of these yen pairs, I just closed out half of my New Zealand yen. If you guys aren't in the Forex Analytics chat room, you guys can come over here and go into the trades room. You can see what open positions that I've got going on. And I just closed out half of my Kiwi yen. I've been short for a while. I have a new cost average because, here in the United States, we deal with FIFO, where we get them all lumped together, where you guys can trade them independently, your positions. As a U.S. trader, we don't have that luxury, unfortunately. But you look at some of these yen pairs, like here's the Kiwi yen. Obviously, we got this double top range extension, should take us down a little bit further. But notice like these euro, like the euro yen is really heavy. Sterling yen's on channel support and trying to break down, and I mean they look ugly. So Kman, and I'm going to come back to you, and I'm sorry, Ryan, I'm not ignoring you. I want to come back to you too. But Kman, we have a big month this month with Japan, and we have the BOJ. And there is some risk that they might actually raise rates. And I mean, if they do, they are definitely the divergent central bank right now, right?
I think they actually will go. But we were having the bit of a discussion around it. If you missed it on the Flow show about how much is going to be important, and what he says after that. I mean, imagine that he does 25 and he goes on pause. It's possible. We don't think they will go on pause right now. It's a bit
Yeah.
early. They still want to take advantage of the window being open to continue. It's looking a bit better now as well with the yen under control, let's say. They don't seem to risk so much of an August event, but that is probably going to hold them back from really pushing too hard on the metal. That and the considerations of government spending needing to be funded with all their extra stimulus packages. So they may decide to not go a full 25 basis points this month and keep it a bit a tad slower or so. That is a possibility. Now, about the market reaction, I think, yeah, there's still a divergence. They are still raising rates where the others are cutting them. So that's what we said also. I think we may be a bit rangy now that we saw this move going into the central banks, but it is so that and you rightly pointed out that the yen crosses remain heavy, and that is usually a sign that whatever happens to the other dollar pairs, dollar yen will probably be kept in check as well. The only thing about the correlation and markets, Dale, it's usually when markets turn around, the yen pairs turn around, because that's how the correlation works. It's not as often that the yen drives the rest of the market, if you know what I mean.
Okay.
Cheers.
Did it not last summer? Not
I
this,
think it was more, last summer. This summer, you mean in August?
Yeah.
Yeah, no, that was Bank of Japan going with a bigger hike than the market was
Okay.
expecting on an earlier one, and they took everybody kind of by surprise there as well. And then we had at the same time, you were right in that one. At the same time, we started to have potentially the U.S. jobs market slowing down. So we had a
Yeah.
coming together of a couple of events, all right?
Yeah. Okay.
Yeah.
Always learning.
We all
Always be learning.
Always be learning.
Always
Yeah.
be learning. Hey, real quick before I'm gonna go back to go back to Ryan really quick, but I need to mention this. This is the last day. Or it's Cyber Monday today, and you get actually you have a 30% discount if you come into the Trader Funding Program. And if you're new to the Trader Funding Program, I just want to mention this just because, as you can see, you can access up to $1 million account size. You have to take an assessment. The assessment is really your only risk. From there, you're risking our money. Once you pass the assessment, we have a very simple one-step process. You have to make 10%. You can't lose more than 6% in an unlimited amount of time. And that's a 6% drawdown from your high watermark. I kind of have well, first of all, if you're new, you're going to get a one-on-one consultation with me. If you take over $100,000 assessment or reassessment, I'll meet with you again if you want to meet with me again. I have a little bit of a unique perspective on this because obviously I've passed assessments, and I'll kind of tell you how I've done it. But more importantly, you know, as a prop trader myself for many years, I used to get paid on a quarterly basis, and to me it was like passing an assessment every quarter. I mean, that's just the way we had to do it. That's the way we got paid as traders, you know, trading larger books. So I'll kind of give you my strategies on how I did it. So if you want to learn more about the Trader Funding Program, check it out today, because today is the last day. We have the Cyber Monday deal, and then you get 30% off all assessments today up until the end of business today. So that would be 5 p.m. Eastern. Once the markets reset, roll over, then that will be gone. So make sure you take advantage of the Trader Funding Program. Like I said, today, that's the first time we've offered a 30% discount, and it was only for this weekend and Cyber Monday. All right, Ryan, I know do we have any data coming out right now? I should check
No,
that. Okay, yeah, it's all the ISM in like an hour and a half. Ryan, really quick, Euro's obviously under pressure. These yen pairs are strong, and I'm sitting here looking at the Aussie and the Kiwi, and they're still trading really heavy. What do you what are you looking at for the rest of the day and the remainder of this week?
a couple of things I'm looking out for: potential breakdown in euro sterling under this 83 level. If it starts holding on this 83, then we might be heading a bit lower, but it's got to get below those 82.76 mark and those prior lows to really look like it's cementing a break. And also dollar China, that's on the rise as well. And one I've been looking at for getting in some shorts. I was going to start around 728, but the price action had me thinking we might be getting a move up above there. So I'm trying to sit on my hands and maybe get a move up to the 730s to start building a bit of a short.
Awesome. Yeah, I mean, hey, technically it would say we just puncture right through the very top of that resistance and then reverse. So, I mean, that's what the chart pattern would suggest. We just make it up here and reverse. So, who knows? And I want to say thanks, Steve, for your input and great call on the yen and the dollar index. If you guys want Steve's analysis, he does all the basic technical analysis over the weekend. You can see his charts, not that one. It's the daily charts and the weekly charts. There's his weekly view of like the euro and how he sees it. And his commentary is all typed up there. And Kman, thank you for your input about what's happening with the BOJ. It's going to be a big one for central banks this week. And by the way, if you guys aren't listening in the Flow Show, I listen to it when I get up in the morning to get caught up myself. So make sure you guys are listening in, especially if you're there live, so you can interact with Ryan and Kman. And Dale, I know you have Mr. Kramer here, so I'm going to let you take over and have a great interview.
No, booyah! Not Jim Kramer.
Not Jim Kramer, no.
The guy that's a lot more right than Jim Kramer, Michael Kramer, and not quite as funny as Kramer on Seinfeld.
No,
But
definitely not.
you have a nice demeanor, Michael. Great to be able to talk to you again since we've gone through, kind of like a paradigm shift through the election, and I follow your work and see you're bearish in the video. We're on the same page on a few things. So where are we at in December? Has there ever been a big break or a market top posted in December historically?
I don't know. I remember 2018. That was pretty nasty.
Oh yeah, that's when your cousin Kramer went into that rant. They do not know what they're doing.
No, that was 2008.
Oh my God. Okay. 18. What
18, that was when Mnuchin was calling around to the banks to make sure they had enough liquidity and everyone was making fun of him on Twitter.
Oh, all right.
That was when we had that fall of 2018 decline. It was about a 20% drop that we had in the market. And I remember that what was specific about that was that it was one of Jay Powell. He had just really been the Fed chair for a few months at that point.
Okay, I remember.
And he's up there talking about how we're not even close to neutral and the market's just dropping like a stone.
Yeah, and then he was singing Kumbaya with Bernanke and Yellen got together with him and flipped him.
Yeah.
They put him under the light, man. Interrogated the guy. What do you do in telling the public the truth? Right?
Yeah, no, you can't burst the unrealistic bubble.
All right, so you look at some real interesting indicators to give you a feel for what's happening under the surface of the markets, and I love that about your work, that you're not talking about the obvious stuff we all talk about. So what's top of mind for you today, Mike?
Well, as you were talking about already, I've been watching the Euro. I think there's a lot of interesting things going on there, especially with the France development over the weekend. Obviously, the yen is probably the most top of mind right now with looks like we're probably going to get a December rate hike out of the BOJ. It's funny because a lot of people are sort of dismissing the yen importance and the unwind of the yen carry trade, but I'm not assuming that that's not going to be an issue. I think that it may actually still be an issue, especially when you look at the performance of the NASDAQ versus some of these other currency pairs like the CAD JPY, and you overlay that with the NASDAQ, it's been actually tracking it pretty closely. So,
Interesting.
I can share my screen and share
Yeah,
stuff.
go ahead. Yeah,
I
go
know
ahead,
we like to
Michael.
do that usually.
No, I prefer when my guests show me your stuff. Okay. So the CAD yen, and you also use USD CAD as a risk currency as well.
Yeah, so let me
Go ahead.
let's ignore this stuff. um, so if we do USD CAD JPY, you can see that's really broken down quite a bit. Obviously, Canada not really having the greatest, is having a little bit of economic struggles right now. And when you overlay the NASDAQ futures over it, you can see that they've in terms of price, this is certainly outperformed. But if you bring it in closer, I mean, you can clearly see that they've still been somewhat trading together. And so I'm just watching this because there's clearly been a divergence lower at this point, where the NASDAQ hasn't really yet diverged. And if you watch the MXN JPY as well, that's also something that's had a relationship in the past that is clearly showing signs of divergence, and we haven't seen it yet. So, I try to look at a lot of different things, and the USD CAD has really been a great indicator in the past when you compare it to, something like the NASDAQ or the S&P. For whatever reason, it's kind of broken down more recently, but you can clearly see that tops in the USD CAD has related to major bottoms in the S&P. And you can also make a case that some of the major bottoms in the S&P have come when there have been, major tops in the S&P have come at times when you've had these bottoms in the USD CAD, such as in here and in here. So it's kind of the relationship has broken down more recently. Not really 100% certain why. I'm thinking it has something to do with the VIX. Implied volatility also has a strong relationship with the VIX, with the USD CAD over time. So they tend to follow each other pretty closely. Again, there's been a big divergence here. I think this might have had to do with the election and such. So,
could that be, Katie Stockton called the move after the election a buying climax.
Yeah, I mean, that's possible. And I don't, look, I think the last time I was on the show was in July, and you had asked me what I thought about the market. And I said, I thought the NASDAQ may have topped. I mean, it looks like it may have actually put in some sort of peak here. And I think it's going to largely depend on a couple of things. I mean, I think, rates are obviously a driving factor at this point. I'm watching, the 10-year very closely right now, because the one thing that I've noticed more recently is that we've seen a major uptick in inflation pricing. So we've seen, zero coupon, 2-year zero coupon swaps move up quite a bit since the Fed started cutting rates. I mean, this is a very big move. And so, if the market's going to be pricing in higher, and you can see where we are right now, we're sort of at a major, breakout point where if we're going to break out, this is going to lead to potentially much higher inflation expectations. And basically,
so maybe the Fed doesn't cut, Mike.
Yeah, I mean, then there's your dollar, right? Your dollar is just trading with inflation swaps, basically. So yeah, I mean, it's possible that you were talking about the job report coming up, and we're looking for 4.1%, 200,000. I mean, it could be stronger than that because we've seen a lot of regional data from the Fed. I'm curious to see what today's ISM report will be, because a lot of regional PMI data points we've seen from the Fed have been very strong in employment specifically. So, my big thing here is that, again, I've been bearish on the market because of many different reasons, and that's obviously been wrong. some of those reasons have been because of, stronger currents, stronger dollar, fewer rate cuts, higher rates overall. And for the most part, that's played out, but the equity market has really not responded. But going back to your December of 2018 analog, right, where you said, has anything ever, broken down in 2018? And I call it the 2018 ghost, because there's something that is very similar right now that is taking place that took place in 2018. This is a chart. It shows you the margin balance levels versus the reserve balances held at the Fed. The black line is reserve balances. The green line is the margin balances, and the orange line is the S&P. So you can clearly see in this period of time, reserve balances were dropping materially while margin balances basically peaked and weren't expanding anymore, but you still had an S&P 500 rising.
Yeah.
And lo and behold, that's exactly what's happening now, where you have reserve balances dropping, margin balances no longer expanding, and S&P 500 continuing to rise. So that kind of suggests to me that you're not really, the market's rising somehow, but it's not rising because there's more liquidity coming into the marketplace. And that may
Could
be
it still just be short squeezing?
It could
Still,
be. I'm actually thinking it's more related to leverage. Perhaps we're not really seeing margin expanding, but somehow people are able to expand their leverage potentially through options. And that may be driving the market more, or maybe futures, because when I looked at this over the weekend, let me see if this is it or not.
because I did see that the COT has commercials the most short they've been in a long time.
Yeah, so
Isn't
this
that
is
true?
the dealers. This is dealers. And you can see that dealers are the most short they've ever been
Ever.
right, in terms of
That's a big
gross.
word.
And then in net terms, they haven't been this short since 2008. I mean, dealers
Okay.
are basically just taking the other side of the asset managers and the non-reportables, right? Or the
Yeah.
levered funds. And basically when you think about asset managers are as, bullish on the market as they've ever been. Let me just see if I can find that one.
What, like the greedometer?
No, when you look at positioning,
Oh,
I was just doing it over the weekend.
it's okay.
Oh, here. Maybe this one's it. So those are if it loads, those are some of the things that no, this isn't it. But those are some of the things I'm looking at more recently. So I don't really rule out the fact that you could see a December pullback. I know that seasonally this is a strong time of the year.
Maybe that's the reason, is that everyone thinks that it's a layup into the end of the year.
Right. And, last year was sort of odd because, when we think about seasonality, you typically think about, okay, November, December, best time of the year. Maybe we'll add, 1 or 2% or 3%, not 10%, right? So, when you look at even the technical setup of the S&P, we've been, in this rising wedge really since, call it August.
Yeah.
And we've been testing it, and we really haven't been able to break out to the upside. And right now we've just kind of come back again to it. So, and then when you look at the NASDAQ, it's a similar look. I mean, it looked like we had a classic, rising wedge with throwover.
Right.
Then it looked like we were
Right.
going to bust through the bottom, and we
Right.
didn't.
Yeah.
But, if you use NVIDIA as a leading indicator, it has.
Yeah, it did. Yeah.
No doubt. Right.
That was
And
really ugly action
and it
after
did it
the
really on everything you want to see, rising
Yeah.
volume, falling momentum. You
Right.
got back to, support on Friday, 139.5, and that's where you failed. So, I mean, when you start looking at that, and then the SMH looks really ugly too,
Yeah.
with sort of a bearish flag or bear pennant in it.
Google, how about Google? Doesn't look too good either. That's one of my shorts.
Oh, really? I've owned Google for years, but
All right.
Yeah, I mean, Google, it doesn't look, I haven't really looked at this
I
closely.
mean, it's a failing rally up at that 181 level when the whole
Yeah,
market
sure.
was making new highs.
Sure, sure. You know,
Yeah.
I get that. And then you came
I,
back down, you fell through support, a
yeah.
pretty strong volume too. You know,
Looking
Meta
for
obviously is another one that's
130.
important. Yeah. And Meta is
I'm,
obviously another important one, right?
yeah.
Because Meta has
Yeah.
been one of the big winners. And so
Yeah.
it doesn't look great. I mean, so if you think about it from a standpoint of, you know, if you get, you know, the stronger, if you get that move higher in rates, and you get uh and you get the higher rates, you get the stronger dollar. I mean, you got to think that financial conditions are going to start to tighten, and typically, you know, you haven't, you know, you can see financial conditions right now are really easy, and you know they haven't been this easy since 2021. And this was when the rally really started in earnest, right? Which was in October of 23.
Yeah.
And this all has to do with, you know, basically, you know, credit spreads contracting. And credit spreads are basically also at levels that are historically, you know,
Yeah.
low.
The ultimate complacency, the tightness of
Right. I mean,
credit
if you look at the
spreads.
Bloomberg high yield OAS, I mean, this is a measure that goes back to the early 90s, and you have, you know, basically we're at 2007 levels when you look at it from this perspective, right?
Yeah.
So I mean, there you are, basically
Yeah.
at, you know, some of the lowest, tightest spreads you've seen since the GFC. And then the other thing that I thought was really interesting over the weekend was I was looking at realized vol, and 10-day realized vol is under 5. So basically that implies that, you know, if you take the rule of 16, which is basically, you know, 200, the square root of 252, if you take the square root of 16, it basically, if you take the rule of 16 and you add and you work it off of a 5 vol, that basically means that if the S&P 500 moves more than 31 basis points on any given day, up or down, realized volatility is going to start rising again. And once realized volatility starts rising again, you're going to see implied volatility reset. And this comes at a time when, you know, you have 1 month implied correlations basically at some of their lowest levels in years. And that just means the market is not correlated, right? That the implied
Yeah.
volatility of the market and its components are not correlated. And so once you start getting into a situation where you have really low levels of realized volatility, really low implied correlations, you know, really tight credit spreads, dealer positioning,
It can't get any better.
right.
Right.
I mean,
So
you can have another July type of moment, but, you know, and then you factor that into, you know, maybe a Fed doesn't rate cut, maybe the Fed signals its neutral rate's not, you know, closer to 3%. You know, if you look at Fed fund futures, I mean, they're telling you that neutral is somewhere around 3.5%.
yeah.
And you know, that makes it, you know, so that, you know, in other words, like, financial conditions have nowhere to go but higher, right? I mean, I don't know what this blip is in here, but if you draw the curve out and you just, you know, assume there's a normal arc, you know, you're talking about a 3.7 and this is 3.5. So somewhere between 3.5 to 3.75, you're talking about a Fed, a neutral rate on the economy, right? And
Yeah.
then if you take, and I'm just rambling, I'm sorry. But then if you
Good
take
stuff.
the 10-year and you subtract the 10-year from the Fed fund futures, or the Fed funds rate, you know, we typically peak at 300 basis points. So how low is the 10-year going to go from here in a 5% nominal GDP world?
Yeah.
I mean, if my view, you should have a 10-year closer to 6%, as long as we don't have a recession.
Okay, so that's a great segue. The bond rally we had on the appointment by President-elect, what's his name, Bessemer?
That's it.
Okay, and bonds rallied really on that,
Right.
not on data. Is that rally going to hold? Because it was on the verge of really capitulating. And I
Well,
look at it, I look at the weekly, like in TLT,
right.
and there it doesn't look complete to me anymore that we could actually attack the 80 level again.
Yeah, and I
And,
agree. I mean, look at the curve, right? I mean,
yeah,
Besson is a macro fund manager. Uh, and he's looking at the same, I mean, so look at it like this. He was a Soros guy and he worked for he also worked with what's his name, Druckenmiller. What is
who's
Druckenmiller's position on rates? He's short rates because
yeah,
he thinks they should be much higher.
right,
So what if Besson's view also is that rates should be much higher?
yeah,
How do we know that he doesn't think it's a really good time right now to issue a lot of duration with a 10-year at 430 or 410?
right,
Because
yeah,
he looks at the curve and he says, "Oh, I can issue 10 years at 430. Like my models show me that the 10-year should be 6." I have
yeah.
no
What if it,
idea.
yeah, yeah, yeah. So how do you think he's going to get along with President-elect Trump? How long does this guy last?
I don't know.
I know. Anyway,
Yeah, I
so
mean, actually, I was surprised Mnuchin was the only one that really made it all 4 years with him the first time around, right? So I was
yeah,
surprised he didn't bring Mnuchin back, but I guess Mnuchin's just done.
yeah. All right.
But if he, who knows? Maybe he lasts. Maybe he'll last the 4 years. I don't know. I think I know Lutnick wanted the position, so who knows?
He wanted every position.
Yeah, I know.
Hey, Mike, let me ask you, what do you think about the fact that Paul is
Oh,
now pretty much on
who?
all right, go ahead. Go ahead.
Oh, I'm sorry. Just before you go, because I know we talked about this the last time, the Kospi and
Yeah,
the IWM.
yeah,
I have this little paper trading thing I'm trying. So just ignore that. Um, and you take the Kospi and you take the IWM, or you take the Kospi and you take the Russell 2000.
yeah,
Um, remember we talked about this the
yeah,
last time. Look at this
yeah.
divergence.
Wow.
Look at
Yeah,
that.
yeah.
I mean, if
There,
you're, I mean, it was funny because I was telling everyone in July that, to be careful with the small caps because the Kospi was going the wrong way while the Russell was rallying, and people were, I was doing it in my YouTube videos and I was
yeah,
getting really heckled. They went away
yeah,
really quickly.
yeah, yeah, yeah.
Well, look at that.
I wanted to ask you, Paul is pretty much unfettered now. He's not seeking another term. It's got a year left. I don't think that he's crazy about who won the election. Do you think that he wants his legacy to be that he stood firm in front of inflation uh, and even risk a recession, or just go along with lower rates, which will most likely be uh, demanded by the administration? Which way do you think he's going to go? He doesn't have any pressure on him to do
Yeah,
anything anyone wants him to do.
right. Yeah, I mean, I think the biggest risk he runs right now um, is that
Letting
of inflation
inflation.
coming back,
Yeah.
and I don't think he wants to be remembered as Arthur Burns. Uh,
Okay.
and
That's not bullish the markets, because the way the market is currently uh, the way it's currently, it's wrong footed if that's his mission, and it's not
yeah,
going to be employment.
and you can see basically when you look, this chart takes 2-year inflation swaps and it minuses the Fed funds rate,
Yeah.
and what it shows you is that even though the Fed is cut by 75 basis points,
Yeah.
policy is actually eased by 180 basis points because you had the 75 basis point rate cut and you had basically an 80 basis point rise in inflation expectations.
Yeah.
So policy is actually a lot looser today than where it was when the Fed started cutting rates by quite a bit. And, the question becomes, does inflation expectations continue to rise? And I tweeted this out yesterday as sort of like a joke, but it's a valid point. This number on Friday, this University of Michigan number, could be a very important number because it came in at 3.2% last month. That was the
Highest
highest
ever.
value in the series.
Yeah.
And the interesting thing is, if you go back to 1970, you'll see that this value here at 3.2% hasn't really occurred very many times since 1995. And if this month this number gets over 3.2%, I think that's a really big deal because that's a sign that maybe consumer inflation expectations are now becoming de-anchored.
Okay.
So I would really watch this very closely if you get a number above 3.2% and specifically how the market responds to it.
You did it again, Michael. Really a lot of interesting looks. I really enjoy talking to you every time you drop in because
Thank you.
I see things that I wouldn't normally look at myself. And Mike has a YouTube channel. He also, you can subscribe. What's the best way besides X at Michael Mott CM? Best way
So,
for people to follow you.
so I've been really also focusing a lot on Substack right now.
Okay.
I've been posting a lot of notes there. I publish under Michael Kramer there or under the Market Chronicles on there. And I also have a YouTube channel called the Market Chronicles. I'm also in the process of starting another YouTube channel with George Noble called Beyond the Charts, where we're going to be doing more interview-like type stuff. And I'm also on Seeking Alpha under Mott Capital Management.
What are you doing copying me with the interview stuff, man?
Well, it's not. I wouldn't say it's copying,
What would you call it?
What would I call it?
Yeah.
Oh,
Huh? Is it an
it's not really.
original
I'm
idea?
not trying to copy you, Dale. I'm certainly not trying to take anything away from you.
No, you
You're a good guy.
copycat. You're a copycat with interviews. No, everyone did it. Shy Girl, everyone. So
Yeah.
they say imitation's the highest form of flattery.
Flattery,
But the
yeah.
truth is, I'm trying to be like you now, Mike.
Oh,
So
really?
I want the same amount of views you're getting on YouTube, and I'm jealous.
It's hard. I've spent a lot of. You got to analyze the data. You got to look at those charts like you're analyzing a stock chart.
I know, but I tell you what, guys, pay attention to what Mike is saying. He's the first one to say when he's wrong, he's wrong. But some
Yeah, and I'm
things
wrong
that
a
can,
lot. So
yeah, we're all wrong a lot. But if we're managing risk, we don't have to be right all the time.
no, and I
So
think that's one of the biggest pieces that people miss with what I'm trying to present to them. Is
yeah,
that I'm trying to present the levels that are important and that matter, and that if they break,
yeah,
then that means you have more to go, which other direction that may be. And people tend to think that they seem to miss that point a lot. So
yeah.
it's an important
Well,
one to get.
that's why we're here is to help people avoid the landmines we have stepped on ourselves.
Of course.
Right. And
Yeah.
Mike, I really appreciate your giving spirit of bringing your work here because I know you're a hardworking guy, and you spend hours and hours and hours looking to get that's your edge. And thanks for sharing your edge with us.
Not a problem. I enjoy it every time.
All right, Michael Kramer, everyone, follow him at the minimum on X. Go check him out on Substack, and he should be included in your intelligence gathering, especially in this environment that we're in December. So, it may end up being a December where the bulls end up with coal in their stocking. So be careful out there. Thank you, brother.
Thank you.
All right. That's going to be a wrap. Don't just count your pips, count your blessings. Could join the team in 15 minutes. And I'll see you for Turnaround Tuesday. Mike will be back with us next year. Adios, everyone. Everyone good? Everyone okay? And remember, you didn't miss the yen, right? So if, if the BOJ does not tighten and the yen rally, US dollar yen rallies back towards 53, I'll be putting some back out there. That's a wrap, everyone. Have a good one. Good hunting.